Hello there, welcome to another video by RealFX. If you're new to the channel, don't forget to subscribe and hit the notification bell icon so that YouTube will alert you when we post another video. In this video, we are going to learn about Quasimodo levels and Quasimodo setups. Be sure to watch till the end if you want to know the secrets of this setup and to find success in the financial markets using these setups. When we talk about the Quasimodo setups, we have two types of Quasimodo setups, the normal Quasimodo setup and the advanced Quasimodo setup. So in this video, we're going to be talking about all of them. First, Quasimodo setup, which is the normal Quasimodo setup. This, guys, is the normal QML setup. This, guys, is the normal QML setup. Let's look at the normal QML setup. So as you can see here, I've already drawn some sketches. So this is as you can see, this is an upward trend because we have higher high, higher lows, higher high, and higher lows. And then after the higher high, we have this liquidity here. We have this liquidity over here. This liquidity that is building here. And then we have this level over here. Now this level over here, this is our Quasimodo level. This is our QML, our Quasimodo level. That there, guys, is our QML. Now this first setup works when we just tapped into a higher time frame order block. Let's say here we had a higher time frame order block. Let's say we had something like this. Let's say here we had an order block and the market came into, okay, let me fix this. The market came into, let me change the style. Okay, the market came into this order block here, and then when it reached into the order block, the market started pushing down. So this only works when we just tapped into a higher time frame order block. So the normal setup works when we just tapped into a higher time frame order block. So this is liquidity here is gonna be induced. So this is liquidity. This here will be our liquidity, and then when we have liquidity on both sides, and then the market pushes up, and then this here is the previous higher high. So there's always gonna be an order block here, guys. There's always gonna be an order block here. So we use this order block as our entry. There's always gonna be an order block. We cover that order block, and that will be our entry. And then the take profit will always be at the low. So the take profit will always be at the low, maybe the low of this higher time frame structure. It can probably be the low of this higher time frame structure. So there's always gonna be an order block here. So this is our QML. This is our QML level. This is the liquidity. These are the requirements, guys. There has to be liquidity. If you don't see liquidity, you don't trade, because if you don't see liquidity, you are obviously gonna be the liquidity. So if you don't see liquidity, you don't trade. So there's always gonna be an order block here. It's very likely for an order block to be here. There's always gonna be an order block. Now let's look at the second setup. Now this one is the advanced QML setup. This is the advanced QML setup. This is the Quasimodo setup number 2. Now this is the advanced QML setup. Advanced QML setup. Now on this setup, guys, you can always find it and trade it on the very same time frame. You don't need an order block from a higher time frame. You can always trade it from the very same time frame, but you have to take this low as the take profit. You have to take this low as the take profit. So as you can see here, we've been having higher highs, higher lows, higher highs, higher lows. Break of structure here, obviously. BOS. And if you don't know what BOS is, be sure to check my previous videos. I talked about break of structure, and also here break of structure. And then when we come here, this is where we talk about church. And if you don't know what church is, guys, be also sure to check my previous videos. I'm gonna link it in the description below. so you can check it out. I also talked about church and church versus flip. I've also done that. So as you can see, this here will be our change of character. So this shows us that the market is moving, it's now changing direction, it's now changing the trend from an upward trend to a downward trend. And then where is our QML? Our QML will be here. This will be our QML. This will be our QML. And please watch the video till the end so that you can see how we apply this on real chart. So that will be our QML. So where do we expect to find our order block? Our order block is expected to find here. And then you must know, guys, that you should always look for a what? For a significant order block. For a significant order block, not an order block that has already been mitigated. And then also here, guys, you must see liquidity before you tap into your QML. You must be able to spot liquidity. The market must do something like this as it pushes to the upside, creating liquidity, and then tap into your QML and then start pushing to the downside. And when the market takes out this small structure over here, as you can see here, we have a minor change of character here. We have a minor change of character here. And then when we have a minor change of character, you can also dive into the smaller time frame and look for a QML, a Quasimodo level. So it's going to be a Quasimodo level within a Quasimodo level. That's how you get a lot of confirmations before you take a trade. So where will be your QML? Your QML will be here. Your QML will be here, and then the market will bounce from here going back into your QML and then all the way to your take profit. So this is how you can also minimize the amount of pips you are going to lose by having a confirmation entry using the QML. So another block is likely to be here. Another block is likely to be here. You are likely to find an order block there. So you take your trade from that order block going all the way to the downside. Going all the way to the downside. So that's how you can be able to take trades and make profit using the QML. And now we are going to dive into the real chart. Okay, guys, let's look at this trade on GBP Swiss francs. Now let's look at the trade that we could have caught using this strategy. As you can see here, we are in a downward trend. As you can see, we are breaking lows. We're breaking lows. If you don't know anything about BOS, be sure to check some of my videos. I've made tons of videos talking about BOs. Break of structures. This also a break of structure to the downside. We also have a break of structure here, and then another break of structure here, another break of structure here, and after that break of structure, obviously you can see this perfect trade you could have taken from this order block here, and then you can see that order block was influenced by which QML? This QML here, that one there. So the order block that is near the QML is more likely to be significant. So we can see we have that QML there. Okay, so we had some liquidity. It's very important that you confluence these things, guys. We had some liquidity here, as you can see. We had some liquidity all the way down there. We had some liquidity. Okay, I'm not gonna show you I'm still gonna show you the trade that I'm talking about. Okay, this is just a previous trade that you could have taken using some of the strategies I've shared in this YouTube channel. So you can see that this is the liquidity. Obviously your target is gonna be this low here, which was eventually taken out. That low was eventually taken out, but that is your target. And then next, what do we expect? Obviously can't win all the time, guys. You can see there's liquidity here, and what we're going to expect, you can see we have an order block here, and then we have that QML there. That QML there means this order block is more likely to hold. Now I'm gonna be very transparent with you guys. I'm not gonna censor out anything. As you can see, that order block there, and then because here we have a lot of liquidity, we'd expect the market to come and mitigate these levels over here when you dive into the future. As you can see, the market runs the liquidity out, and then it also runs out our order block. So it runs out our order block. When it runs out our order block out, what do we expect? Now we can see that, okay, our order block has been violated. Simply means we now have a change of character. As you can see, we have a change of character to the upside. So we take out the order block, it failed to hold, and then we have this as our change of market structure or change of character. Change of market structure or change of character. So we have that change of character there. The liquidity obviously has been drained. Let's get rid of that. And then since this is the previous higher high, this was the previous higher low. No, this was the previous lower low. Since we have a change of character, now this becomes our QML. So this simply becomes our QML. And where is our order block? As you can see, there's a hidden order block here. If you don't know anything about a hidden order block, be sure to check some of my previous videos. So this is the first part. This is our hidden order block. We mark the order block. Now we must see some liquidity. Okay, liquidity is being generated here in the form of a trend line. That's the first part, in the form of a trend line, and also relatively equal highs. Also relatively equal highs. As you can see here, relatively equal highs. We have relatively equal highs, and we also have liquidity here. We must run liquidity from both sides, buy side liquidity and sell side liquidity. So this here would be our liquidity. This here would be our dump money. Some prefer to call it the dump money. So we have liquidity on both sides, and then we have what? A tap into our order block. Just like that, we have a tap into our order block, and that was our QML. So a QML helps you to identify the order blocks that are likely to hold. Order blocks that are in a close range with the QML are more likely to hold. So some people would prefer to put their buy over here, their buy over here from where the QML starts all the way to the end of the low. So they would buy from from here. They would buy from here. No, they would buy from here, and then they would cover the rest of the low like that. But at real FX, we don't do that. We don't do that at real FX. We identify the order block that is more likely to hold, and we take the trade from there. We take the trade from there. We take the trade from there. When we run out this liquidity here, that's where you take your first profit, and then the second profit is always gonna be that high. Every SMC trader knows that the high or the low, the recent high or the recent low, is always the take profit. And then as you can see here, we did have some sort of re-entries. As you can see, we had this and this low, this act as liquidity, and then it pushed to the downside. Tap, we use this breaker block, but breaker blocks are a topic for another day, guys. Thank you so much for watching this video, and be sure to check out our next video.